Hello, I'm happy to welcome you back for this new edition of Bourdier's Monday, August 10th report. Let's start as usual with a brief review of the main economic statistics published last week. In the United States, these statistics were somewhat mixed. Among the good news, as we can see on the chart on the left, the purchasing manager's confidence measured by the ISM is doing well. In the manufacturing sector, confidence increased more than expected in July, and that in the services sector is relatively stable. Overall, the level of confidence is high and consistent with the continuation of the economic growth cycle. Furthermore, the prices paid component of these two indices is on a deceleration trajectory, particularly in the manufacturing sector, as shown in the chart on the right. The combination of resilient economic activity and moderate inflation defines an investment environment described as Goldilocks, ideal for investors, as we shall see. So this is good news. Still in the United States, we had the release of the employment report for the month of July last week. As we can see on the chart, the economy lost 23,000 jobs last month instead of the 80,000 creations expected by the consensus of economists. Furthermore, previous months were revised downward for a cumulative total of minus 103,000 jobs. Nevertheless, this apparent disappointment must be put into perspective. Indeed, job losses are concentrated in public employment with 53,000 fewer jobs, but the private sector is still hiring with 30,000 creations. Furthermore, hourly wages only increased by 0.1% in July, and year over year, wage growth slowed from 3.4 to 3.2%. This development is reassuring because it reduces the risk of an inflationary spiral and argues for a status quo on interest rates from the US Federal Reserve. Furthermore, investors are anticipating a de-escalation of tensions in the Middle East, which is allowing the price of a barrel of oil to fall by more than 7%. 10-year sovereign interest rates are following this trend and are falling by nearly 10 basis points in both US dollars and euros. Bond prices are therefore regaining 0.6 to 0.7% in these two currencies. Equities are benefiting from this Goldilocks environment, rising by 3.6% in the United States and 1.7% in Europe. They are falling slightly by 0.5% in emerging markets. Finally, gold is rebounding by more than 7% thanks to the drop in interest rates on one hand and the 0.4% depreciation of the dollar index on the other. This week, all investor attention will be focused on the release of the Consumer Price Index in the United States. Its trajectory is increasingly decisive for the future evolution not only of the economic cycle, but also of the prices of various assets. Deutsche Telekom reported solid second quarter results, notably with profitability that is improving and surprising to the upside. T-Mobile US remains the main growth driver for the entire group. With a 12-month PE ratio of 12 times, management considers the company to be undervalued. Furthermore, it announced an increase in its share buyback program, which is going from 2 billion to a maximum of 5 billion euros. This is good news and a pleasant surprise, especially since, with the dividend, the amount returned to shareholders could be worth around 10 billion euros in 2026. That's all for today. Thank you for your attention, and I'll see you next week.